Welcome back to Investing Talk Podcast. Today, we are wrestling with a stock that's really been lighting up the speculative end of the market, quantum computing. The big question, really, is whether all the massive news catalysts we've seen lately justify jumping in right now, especially given, well, the wild volatility.
Yeah, this one's tricky. It's not just about, reading a balance sheet. It's about sizing up the risk, the potential, and crucially, the timing.
Yeah.
So our goal today is to basically map out those recent wins, the commercial side,
Okay.
then contrast that with the hard financial numbers from Q2, and look ahead at the big speculative drivers coming up. We're using all the source material provided for this analysis.
And hey, if this kind of quick breakdown helps you make sense of things, definitely hit subscribe and like the video. Seriously, drop us a comment below, too, if there's a specific company you want us to take a look at next time. All right, let's kick off with the bull case. The operational progress for quantum computing just in the last 3 months seems pretty unprecedented for the sector. They're scaling up fast.
That's really where the positive story is right now. The biggest physical milestone was back in August 2025. They finished that advanced photonic chip foundry down in Tempe, Arizona. That's the cornerstone.
Right, I read about that. It focuses on thin-film lithium niobate chips, TFLN. Now, for investors maybe not deep in the quantum materials weeds, why is TFLN such a big deal here? What's the differentiator?
Okay. So TFLN, it's basically a leap, a significant leap beyond traditional silicon or even some other early quantum material approaches. It lets them manipulate light much faster, and this is key, it offers more stable and efficient entanglement potential.
Okay.
And crucially, often at room temperature. So completing the foundry proves they're ready or getting ready to produce a premium, scalable quantum product. It sets the stage for, commercialization and fulfilling those pre-orders they have.
And that infrastructure news was followed pretty quickly by some pretty significant customer validation, wasn't it?
Absolutely. They locked in contracts, real-world contracts, for their quantum systems business. We're talking NASA, NIST, Delft University. These aren't just small tests. This is serious validation from, well, serious players.
Right, not just tinkering in a lab. And that validation went international too, right, by September?
Exactly. The sources confirmed they shipped their first commercial entangled photon source all the way to South Korea. Now, for an investor, this is important because selling that kind of source proves they can actually handle the incredibly complex physical hardware needed for things like quantum communication and sensing.
So it sets them apart from the software-only companies.
Precisely. It validates their hardware, their physical product, on a global stage.
Okay, now here's where the story gets kind of mind-blowing from a money perspective. I was genuinely surprised reading the sources. The market pumped almost $1 billion into this company in just 2 months. A $200 million raise in September, then a huge, oversubscribed $750 million private placement in October.
Yeah, $950 million in 2 months for a quantum company at this stage. It's unprecedented. And what's critical here is that this cash isn't just for, general R&D slush funds. It's specifically earmarked to scale up that new Tempe foundry.
Ah, okay.
So it gives them a massive runway, a huge competitive advantage, really.
And then, just to top off October, they got a big credibility boost. Inclusion in the Russell 2000 and 3000 indexes.
Right, which opens the door to all that institutional money, the index funds, the ETFs that have to buy it. Big visibility gain.
So, okay. World-class infrastructure coming online, big customer contracts, international sales kicking off, nearly $1 billion cash injection. That paints a very, very strong growth picture.
It does.
But now we have to pivot to the Q2 financials. And this is where it gets a bit complicated, right?
This is the major disconnect. The financial statements, the ones ending June 30th, 2025, show a company that's still very much in investment mode, which is typical, for early-stage quantum firms, but still.
Give us the hard numbers. Revenue was pretty small, wasn't it?
Revenue was modest. For the whole 6 months ending June 30th, they reported just $303,967. And here's the real kicker.
Oh.
That was actually a slight decrease year over year compared to the same period in 2024.
Wait, hold on. Revenue decreased year over year? How on earth does the market justify pouring in nearly $1 billion if the top line was actually shrinking just a few months earlier?
That's the absolute core conflict you as an investor have to grapple with here. The June balance sheet is almost irrelevant to the current stock price narrative. The whole growth story relies, like 100%, on future deployments, quantum software, hardware, the foundry output.
Okay.
And yes, they are burning cash. The net loss actually increased to $6.84 million for that first half of 2025. Cash used in operations was around $6.2 million. Now, they had limited cash back in June, But obviously, those huge recent equity raises completely changed the game in terms of flexibility, though we absolutely have to mention the dilution that comes with that.
Yeah, always a factor. Yet despite those, let's say, soft Q2 numbers, the analyst consensus is still a strong buy.
That gap right there defines this stock. Analysts are essentially looking straight past the Q2 reality. They're focused purely on the Tempe scale-up, the future potential, that $1 billion. The average 12-month price target is, frankly, staggering, $26.33. That implies, what, 77% upside from where it is now?
And the range is wide, too, isn't it? Like $15 on the low end, but $40 on the high end.
Exactly. It shows even the analysts are acknowledging the uncertainty, but they are betting aggressively that the quantum adoption curve is going to get very steep very quickly over the next year.
So investors are clearly buying the story, the future potential, not the Q2 income statement.
Absolutely. Which brings us nicely to the immediate future the next few months.
Right. What are the big catalysts, the high-stakes drivers that could maybe turn that analyst optimism into actual share price gains soon?
Well, the next phase is all about translating those technical breakthroughs like the TFLN Foundry into actual commercial momentum, orders, sales. The single biggest thing to watch right now is the Q3 earnings report. It's coming up on November 12th, 2025. Consensus estimates seem to be narrowing around a 5-cent loss per share.
Okay.
Now, this report isn't about profit yet. Nobody expects that. It's about seeing growth in the order backlog, maybe some margin improvement, and just hard evidence that the new foundry is starting to ramp up effectively.
And beyond their own earnings report, there are some market events coming too.
Yes, you've got the ETF rebalancing on November 20th. That's tied to the Russell inclusion, could cause some fund flows, maybe volatility. But I think the potentially bigger disclosure event is January 10th, 2026.
Ah, the 13F filing date. For listeners who might not track these, what are 13Fs again?
Right. So 13Fs are the quarterly filings where big institutional investors, hedge funds, have to disclose what U.S. stocks they own.
Yeah.
So come January 10th, we'll finally get to see, in black and white, which major players actually bought into that massive $750 million placement back in October.
Ah, interesting.
If you see some really big, respected household names popping up on that list, that provides instant, potentially market-moving credibility.
Okay, makes sense. Now, let's talk about what's really fueling the more aggressive speculation here, the rumors, high upside stuff.
Right, and these are important because, even unconfirmed, they absolutely influence market sentiment. There are 4 key ones swirling around, according to the sources. First, persistent talk of a strategic partnership with a major global cloud provider.
Like AWS, Google Cloud, Azure.
Exactly. The rumor is they'd integrate quantum computing's photonics into edge AI or secure cloud stuff. If that pans out, huge validation, massive.
Okay, what's number 2? Government involvement.
Precisely. There's speculation about the U.S. government maybe taking an equity stake in the company. Government backing in quantum is a huge stamp of approval. Plus, it suggests long-term capital stability.
And in the sector, there's always M&A talk, right? Consolidation is happening.
Yep. Industry chatter suggests the company could be a target. Maybe acquisition, maybe a joint venture. Some larger semiconductor player or defense contractor looking to basically buy their way into quantum tech.
Okay. And the last one is more operational.
Yeah, the final rumor is about potential export control relief, specifically for lithium niobate, that key material in their chips. If that happens, it could significantly cut their input costs, maybe speed up their path to commercialization.
Wow, okay. Any one of those rumors actually hitting could certainly send the stock flying maybe towards that $40 analyst target. Now, quickly, let's touch on the technicals for traders. The stock closed around $14.87 recently. What's the chart showing?
It's showing some consolidation, actually. The stock is currently holding above its long-term support level. That's the 200-day simple moving average. But it's stuck below its short-term resistance, the 50-day SMA.
And where are those key levels precisely?
The main support, the 200-day, looks pretty firm, down around 12.97 cents. The resistance level to watch on the upside is $17.87. That's the 50-day. A solid break above $17.87, maybe driven by good earnings or partnership news, would be a strong technical buy signal for traders.
And we mentioned volatility earlier. It's extreme, right? People should expect big swings.
Oh, absolutely. The 30-day volatility was reported at, 10.87%? That's very high. For you listening, that means the stock has a high beta. If the S&P 500 moves 1%, this stock might move, say, 1.7%, 2%, maybe even more, up or down. Huge potential reward, but definitely huge risk, too. Very attractive for short-term momentum traders, less so for the faint of heart.
Okay, brings us to the final crucial reality check, the core risks. We have to hammer these home before anyone considers investing.
Number one, without a doubt, is execution risk. They've got the money now, sure. But the path to actual sustainable profitability is long and uncertain. Current revenue, as we saw, is tiny compared to the cash they're burning. The real test is converting those initial deals, like with NASA and Delft, into recurring large-scale enterprise contracts. That's the hard part.
And we talked about those huge capital raises. That implies future dilution risk is still on the table, doesn't it?
It absolutely does. Despite having nearly $1 billion now, the R&D is incredibly expensive. Scaling the foundry costs a fortune. It means more dilutive equity raises are probably likely down the road. Investors just have to accept that potential share dilution is kind of the price of admission for this type of high-growth, early-stage tech play.
Got it. And lastly, just the overall sector risk.
We have to remind you, the listener, the entire quantum computing sector is highly speculative. This stock has high beta, as we said. Expect frequent, sharp price swings, both up and down, that might have nothing to do with the company's specific news that day. It's just the nature of the beast in this space right now.
Okay, so let's try and tie this all together. The investment thesis for quantum computing seems to be they're positioned for potentially huge gains thanks to these big trends like quantum meeting AI. They've got the capital, they've got the index inclusion, and that foundational tech milestone, the Tempe Foundry, is done.
Yeah, my overall rating, based on the sources, is still bullish, maybe an 8.5 out of 10. But the why is critical. This stock seems best suited for two very specific types of investors right now. First, the really agile short-term trader looking to play the volatility around the November earnings or potential partnership news.
Okay.
Or second, the truly high-risk, long-term investor who's making a multi-year bet, maybe even a decade-long bet, on quantum computing becoming commercially vital. For both types, though, position sizing needs to be really careful. Don't bet the farm.
Makes sense. So, final thought then. What's the single most important thing for listeners to watch over the next, say, 12 months?
Right. Given they have almost $1 billion in the bank from those recent raises, the key question over the next year isn't if they have the money. They do. The question is, can they successfully translate that massive funding into actual commercial orders and fulfillment? Specifically, watch for proof they're successfully filling those pre-orders from the Tempe Foundry, and critically watch for any confirmation, any real news on that heavily rumored major cloud partnership.
That's the trigger.
That's the metric. That's what will prove commercial viability is starting, and that's what could really move this stock decisively towards the high end of those analyst targets.